back to the podcast. So today we are saluting our veterans. We just had Veterans Day yesterday, and we thought it would be worthwhile to talk about the benefits of VA loans and give a summary. So if you're a vet watching this podcast and want to know more about your options to buy a house with a VA loan, you're in the right spot. Once again, my name is Ken Angst, team leader with Angst Real Estate Team. The goal of our channel is very simple. We help people like you buy, sell, invest, and we give a lot of tips on what's going on in Washington County and the Reno Sparks area. So once again, we are joined by our ace when it comes to lending, Elena Boland, Wholesale Mortgage. How are you doing?
Good.
So she's the expert on this. We've done a lot of videos, but we thought we'd do a refresher to celebrate the vets and thank you for your service. Make sure you know what your options are. If you have more questions beyond what's in this scope of this video, call Elena, go and meet her. She's great, and she knows these forward and backwards. So let's hop in. So number one, benefits, and I want to talk about this, is no down payment required.
With no catch.
No catch, right? There's a lot of programs out there that have a catch. Let's talk about it. I mean, it is what it is, right?
Yeah, it's a true no down payment loan required. A lot of grants are available out there that will give you a down payment, but there's a catch. It has to be repaid, or your interest rate is higher, etc. With VA loans, there's no catch, no down payment required.
Awesome. So what's a VA? What's a FHA? How much down?
3.5% down.
What
payment.
about a conventional?
5% on average.
So if you're buying the median home price, say at $600.
Yes, big deal.
30 or 20,000 savings. So take advantage of that.
Yes.
It's a great opportunity for vets out there, and it should be. Now let's talk about. She's gonna have to correct me. So we're talking about the second top benefit of VA loans over all the other government loans. We're talking no private mortgage insurance.
Right.
It's called PMI, or is it mortgage insurance? What is the right term these days?
Just MI would be the appropriate.
Mortgage insurance, is that what it is?
Yeah, just mortgage insurance.
Okay.
Unless you're, PMI is just solely for conventional loans. That's the private mortgage insurance.
So when we're talking this mortgage insurance, now what is mortgage insurance? Why do lenders charge it? That's, I mean, it's been a while since we had to do, since 2008 and 9, but people forget, what is that for and where does it go? What happens to that money?
Sure. So conventional and FHA mortgages charge you a monthly premium that you have to pay every month. And it's reserved for cases that involve foreclosure or short sale. So those reserves sit in a pot and help reimburse banks that lend on conventional and FHA mortgage products so that they don't eat the loss in an event that happens like short sale or foreclosure. And you have to keep paying on that monthly premium until you hit a 20% equity standpoint, and then you can refinance out of it.
But not for FHA.
FHA you can refinance.
Oh, you can't. You have to refinance, but you have to refinance it.
Yes, conventional you can actually just call in and have it removed by calling your servicer and requesting an appraisal, and that saves you some money on the refinance cost.
Do you have to pay for the appraisal?
You do.
Okay. So, but it's cheap to do that.
Yes.
Yeah. So keep that in mind. So as a veteran,
don't have to deal with any of that.
That's
you
huge.
can still put down a down payment on a VA loan, but you can put however much you prefer. Really, it could be 1%, 3%, 10%, and no mortgage insurance applies to your loan.
Okay. So
Two
great benefits.
Yes.
Now here's the third benefit. If you're a veteran out there that the VA has for you for VA loans, lower interest rates.
Yes.
So we're at 7. What is, maybe not just for a 7, but overall, generally speaking, if I look at it on average, what is the rate lower by?
It's about a point lower.
What is a point?
1% lower.
1% of what? Of your mortgage balance?
No, meaning your interest rate. So if today's rates are 7% for a conventional mortgage, you can usually get it for 6%, which is a huge savings. It can save you a couple $100 a month on your mortgage payment, and that is a big deal for every family.
Yeah. So, and is that, generally speaking, it's a point, regardless of where we're at? If it's rates are at 5, it would be 4, generally speaking?
On average, it can swing sometimes from 5/8 to 1%, so 0.625, 0.875, 1% range.
Who determines that? Is it the government?
Yes.
Okay.
Mhm.
All right. So we got no down payment, no mortgage insurance, lower rates. We're looking good. What about the fourth one? The fourth one I have here is more flexibility in qualifications. So
Absolutely.
talk about that.
VA loans have common sense underwriting in play. Conventional and FHA have a lot stricter guidelines in place. There's verbiage in the VA handbook given to every lender that runs VA loans that says if there's a way to make it happen, make it happen. So if it makes sense, usually you can get a VA loan done. You can defer to manual underwriting where a human looks at the file instead of software.
Oh, wow.
There's
That's
a
nice.
lot of great things in place to look at finding a veteran, their avenue into homeownership.
Okay, so pro tip. So those are the four. If you want to know more or if you're going to qualify, call Elena. What's your number?
825-1600.
And it's down below. But let's talk about the pro tip. We always like to end. If you're a veteran out there, we just talked about this, and they are working with a realtor, what should they be looking for?
Assumable loans.
Okay, talk about what we're going to do a video right after this. So that's why you got to like our videos and subscribe. But what is an assumable mortgage and how does it work?
So if a seller currently has a VA loan on their home, they can have you as a buyer come in and assume their loan, and you get to keep that lower interest rate that they have likely from, past year's markets. So I've seen some in the 2s, in the 3s, and the 4s, which again can save a family several $100s per month on their house payment. And there was a recent change. A lot of people have to make up, it's called the gap, right?
Yep.
So if a home is being sold
This is key.
for $600,000 and the current assumable mortgage
300.
is $300,000, where are they going to get that other $300,000? Well, the VA just changed their guidelines and said they will allow a HELOC or a home equity line of credit to come in second place to help fill and bridge that gap. So that is a huge advantage to take.
So is that like a VA loan?
No.
It's just an alternative government loan or a private.
I would say any bank credit union lender has a HELOC product. So it's just like any other mortgage where you would shop, but it is on the conventional side.
So it makes up the difference. I mean, ideally you probably wouldn't do that because now you're getting the higher interest rate, right? You don't get the discount.
On some of it, yes.
Okay, so that's great because the biggest challenge out there is someone bought in 2008 for $150,000 and they're selling for $750,000, and their mortgage might be $150,000. So you got to make up the gap typically, but there sounds like there's some other. So that's a pro tip. Have your realtor. We've come across a few over the years. I think I've closed one, but they're out there. But you got to have an agent and a loan person asking the right questions to make sure that you're conveying the message correctly so that you find the product.
Yes.
Okay, so if you want to know more about VA loans or want to work with one of us, we'd love to help you. We have free consultations. Find out why Elena's awesome. Give her a call, or we have free consultations on what we do differently than other agents out there, and love to work with you and earn your business. So